All right, welcome to another episode of Asset Coach Tax Strategist. Thanks so much for being here. Thank you for being a subscriber. If you haven't subscribed yet, go ahead and hit subscribe. Give us a thumbs up on our content. So, today's episode, we're going to continue this kind of conversation of education, education, education. And today we want to talk about what are the 10 types of taxes that are out there. You're like, 10 types? Holy cow. What are you talking about, Bob? Well, they break down very specifically as to where and how the business of government runs. Taxes, remember, are the revenue to allow the municipality, your local, state, or federal government to run. All right. So if there's no revenue coming in, then we got to go fight other countries and take their resources. And sometimes in the situation, it's where we need to earn a revenue stream. We meaning the government, okay? Because it's a business. And so there's cost to that. So let's talk about these and we're going to break down what is being taxed. Does that make sense? All right. So number one, I kind of let the cat out of the bag. Income tax. That's what we're all frustrated about, right? Is this income tax? We earn money and we get taxed not just federally, but also locally and through our state. Okay, so depending on where you're at. So I'm in Texas, we have no income tax, but I'm in the United States, so I do pay a federal tax. Okay, now this is money taken from your income that people earn from a job, from businesses, from investments. The more you earn, the more taxes you pay. We call it a progressive tax system. It starts at 10%, 12, 22, 24, 32, 35, and 37 are the bracket ranges, and there's income ranges based on those. And when you earn money in that bracket, you pay that tax. You make more money than that bracket, you pay that, and then you pay the money that you have in that next bracket taxed. Okay, boom, 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 boom. Progressive tax system. So the more you make, the more you pay taxes on. Now, this is on earnings. Earnings and your personal tax return. The first 2 pages is the executive summary of the flow of the income you've earned from all the different types of incomes. Okay, so that's important. Income tax. The second one is sales tax. This is a tax that's added when you're buying goods or services like clothes, foods, electronics. It usually is charged at the checkout. So you go buy, they scan it, you have your total, you have tax, sales tax, then you have your total of the total and the sales tax, and then you pay that. Okay. And the business is the one who takes that sales tax and sends it to the municipality or who's looking for that. Okay. This is on purchases. All right. Number 3, property taxes. This is a tax paid by you, a homeowner, based on the value of your house or land. And it helps fund schools, roads, and local services. Now, every state's different on how they collect these taxes, property taxes, this home and land. So, for example, in California, all the taxes kind of went up to Sacramento, and they decided, hey, 1 for you, 15 for us politicians. 1 for you, 15 for us politicians, right? In Texas, your property taxes stay local. Okay, so and you can see how much of your taxes are for the county educational system, meaning like the community college, and then also the school district your house is in. So whatever school district you're in, the independent school district, you can see how much of your funds go there. Okay, so all of that money is used for your community. Number 4, payroll taxes. This is tax taken from workers' salaries to support programs like Social Security and Medicare. Okay, this is employee wages. Payroll taxes based on employee wages. Now, on Medicare, it is also part of distributions for an owner. So if you take distributions out of your business, that's added to your overall tax liability. Social Security has a maximum limit to how much of your income does Social Security get paid on. Okay, Medicare doesn't have a limit. Okay, so but Social Security is a higher percentage than Medicare is. Okay, and so also you share with your employer. You pay half, Your employer pay half. Okay. All right. Number 5, corporate tax. This is a tax paid by companies on their profits they make from business activities. Now, this is company profits. Now, this is not totally true. Let me explain. From a federal perspective, yes, this is true. You do your financial statements, you find out you have profit, and whatever's left over, you pay taxes on that. Now, if you're a C Corp, you pay corporate tax. If you're a pass-through, like a partnership, sole proprietor, a S Corp, those profits, losses pass to you, the individual taxpayer, and you pay your tax on that. Okay. Now, what I also meant by this is that when we're looking at the corporate tax, this is on company profits, but this is also based on losses. Okay. So it's not completely, totally a quote unquote, the corporate pays it. Okay. It's based on how the business structure. All right. Number 6, capital gains tax. This is taxes paid on profits that are earned from selling investments like stocks, houses, or property for more money than they were bought. Okay, so for example, I bought a stock, I put in $100,000, it grew to $150,000. I sell it. The $100,000 I don't pay taxes on, but the $50,000 in gain I do. Now that capital gains tax is based on the length that you owned that, as well as the income you are, to determine what kind of taxes you pay, short-term or long-term capital gains. Okay, this is important to understand. Now, this is on investment profits. Now, let's go back to the corporate really quickly. Something that popped in my head while we were talking about number 5, corporate tax, was I talked about the federal. States also address this differently. Okay, so like in California, you have a business tax and it's based on each entity a flat dollar amount. Also, they have a state tax. So if it's a pass-through profit that passes to you, the individual taxpayer, the state has an income tax also. Okay, so you pay that. But let's say like Texas, for example, they don't charge a business tax, but they charge a business tax on top line revenue at a certain top line revenue, not profit, because there's no income tax in Texas. So if your business makes a certain amount of revenue, once you hit that revenue amount and be above, then the state of Texas will start charging a business tax on the top line revenue, because not on profits, unless it's based on the structuring. All right, so enough of that. We did capital gains with 6. Let's go to 7, estate tax. Okay, number 7, estate tax. This is a tax on the money and property, okay, that someone leaves behind after death if the estate is very valuable. Now, this is a separate area of law as well. This is important to understand, and having an estate attorney and how you have things structured. Are you using a trust? Are you using LLCs and entities? Have you structured this? The estate tax is the value of your estate, what's added to the value of your estate. There's a whole bunch of ins and outs. But the bottom line, number 7, estate taxes. This is the taxes on your wealth after you die. All right. Number 8, gift tax. Okay. This is the tax that may apply when someone gives a large amount of money, okay, or an expense property to another person. It basically is shifting of value from one person to another. It's considered a gift. Okay, these are typically on larger gifts. Okay, and now within the estate tax, there's also a gift tax, and there's some linkage between the two. So again, you would have to talk to an estate attorney and see what that all look like based on how to. I have assets, I have value. I want to start shifting that to that next generation. What's that look like? Number 7, estate tax. Number 8, gift tax are affected by that. Number 9, excise tax. Okay, this is a special tax that's placed on certain products like gasoline, alcohol, cigarettes, airline tickets. Okay, these are special products that get extra taxes. So every state is different too. So for example, I'm in Texas. So when you look at our gas versus you go to California, usually California is about $2 a gallon more than Texas. Okay. Now, majority of that is excise tax, the cost of doing business there. Now that cost, gases in California is going up because the supply to feed the demand is changing. So the cost to get that supply to the demand is causing gases to go up. So it's not just the excise tax, but it's also the cost, right? But excise tax, number 9, is a special tax. Now, this is an area that sometimes we got to look at other assets. So like in the Obama administration, as well as the Biden administration, they talked about creating a special excise tax on people who have 401k plans, or a certain balance above a dollar amount has to pay a special tax. Because you're a good saver and you were smart and you listened and you planned for the future, they penalize you on this special tax. Now, this isn't something that's real right now, but usually when there's smoke, there's fire. So they over a period of time, it may become an excise. But that's an example of how it may not just be on goods and things that you purchase. It could be stuff and investments that you've saved as well. All right, finally, number 10, import tariffs. These are custom duties. These are taxes charged on goods bought in the United States from other countries. These are imported goods. So you buy something from Italy, there may be a tariff or a cost on that it gets paid. Okay, so this became more and more popular with Trump in his current administration in trying to reduce a lot of these income taxes and these other revenues that are generated. He's passing these costs on to other countries. Yes, it gets passed on to us in some of our inflated numbers, but once things settle, all these other countries charge a tariff on the United States. That's why we don't have a lot of exports. Okay, so the kind of creating that balance is that these countries tax each other and kind of creates this balance of reciprocation. So not to get into the politics of this all, but that's important to understand the 10 types of taxes that are going to affect you. So if you've ever read my book, Economic Termites, don't worry, it's going to be in the link down below. Economic Termites talks about the things economic that eat away at your taxes. There's 4 major ones: taxes, inflation, time, and the laws and regulations, meaning our politicians. These taxes being one of the areas that really eats away. That's an economic termite, important to know. So again, thanks so much for subscribing. Thanks so much for being here. You like this content? You want more of this stuff. It's interesting. Yeah, sometimes it can be a little bit boring, but you need to know this stuff because this affects your hard work. You go out there, you leave your family and friends, you go put your time and energy into work, generating an income to pay for all these things in your lifestyle. You need to know what's affecting, what's eating and siphoning away all your hard work. And you need to know this stuff. All right. So thanks so much. Go make it a great day.